Are we on the brink of another global banking crisis? The recent slide in global bank stocks has sent shockwaves through financial markets, reigniting fears of a repeat of the 2023 banking turmoil. But here's where it gets controversial. Could this be a mere blip or a harbinger of deeper systemic issues? Let's dive in. On Friday, global financial stocks took a nosedive as U.S. regional banking shares plummeted, sparking concerns about credit quality and mounting risks in the sector. The trigger? Disclosures from Zions Bancorp and Western Alliance, which revealed significant losses and fraud allegations. These revelations, though seemingly isolated, had stoked fears reminiscent of the Silicon Valley Bank collapse in 2023, when high interest rates and bond losses triggered a global bank stock rout. And this is the part most people miss. The banking sector's exposure to recent U.S. auto bankruptcies has reignited debates about lending standards. With credit impairments in private debt rising and default rates hitting 5.5%, investors are nervously eyeing the booming yet under-regulated private credit market. As Mark Dowding of RBC Blue Bay Asset Management notes, weakening covenants and investor protections suggest larger losses on defaults than historically seen. J.P. Morgan Chase CEO Jamie Dimon's recent warning about credit markets, "When you see one cockroach, there are probably more," has only added to the unease. The ripple effect was immediate. European banks led the losses, with Deutsche Bank and Barclays sliding around 6%, while Asian financial firms, particularly Japanese banks and insurers, also took a hit. U.S. stock futures followed suit, with big tech names like Nvidia falling more than banks, signaling fears of contagion. The SPDR-SP Regional Banking ETF tumbled 6% in its steepest one-day sell-off in 6 months, underscoring the market's jittery mood. But why now? Investors are grappling with sky-high equity valuations and a recent AI-led surge in stock markets that some fear has created a bubble. European bank shares are up 40% year-to-date, while world stocks have risen 16%, fueled by optimism around AI. However, periodic sharp falls and gains in safe haven assets suggest growing unease. Gold, for instance, hit a record high, poised for its best week in over 17 years as investors seek refuge. Here's the controversial question. Is this a healthy correction or the beginning of a broader market collapse? While big U.S. banks have reported strong earnings, the nervousness is palpable. U.S.-Chinese trade tensions and expectations of an October rate cut have further complicated the picture, sending government bond yields lower and boosting the Swiss franc. As Vasu Menon of OCBC Bank aptly puts it, investors still remember how regional bank problems in 2023 triggered a sharp decline in global bank stocks and broader markets. The question now is whether history will repeat itself or if markets will stabilize. What do you think? Are we overreacting? Or is this a wake-up call? Share your thoughts in the comments below.